Hello guys, welcome back to the new series of CBSE 2023 accounts paper where we are going to solve all the questions one by one, and in this video we are going to solve all the MCQs here. This is the CBSE 2023 accounts paper set 67 by 1 by 1. So without further ado, let's get started and understand these questions at a concept level. The first one that we have is a partnership sum where we have Hina and Nina, two partners, where Nina withdrew 10,000 per month at the beginning of each month. Okay, and whenever you see that there is a drawing beginning of each month, that means the average that we take is 6.5 months. So this is the important part here, remembering that whenever it's beginning of each month, we take the average period as 6.5 by 12, as you can see here. And another important part is this is a monthly drawing of 10,000 per month. So you have to multiply 12 here, don't miss that out. And then you get your answer as 3,900. If you want to understand more about different ways of calculating drawings, what are the different scenarios, then check out the entire playlist in my channel where you can find the list in the description box below. The next one that we have, Viva and Asha are partners where Asha withdrew 1000 at the end of each quarter. Okay, and when we are doing this end of each quarter, that means the average period which is taken is 4.5 months. Okay, how it is arrived at, what is the calculation? Again, you can check out the entire playlist, and everything is explained in detail how this calculation, this average period is arrived at. Okay, do check that out, and if you have any further questions, do let me know. The next question that we have, Aman and Chaman are partners in a firm, and on 1st July 21, Aman advanced a loan of 6 lakhs to the firm, and there is no partnership deed. Okay, and in this case, whenever a firm is taking a loan from a partner, then the firm has to give interest at the rate 6% per annum, and that's why 9 months will come into picture because the loan was given on 1st July. From 1st July till 31st March, it's 9 months. So 6 lakhs at the rate 6% for 9 months is 27,000. Next one that we have, Akshita Limited issued fully paid shares of 5 lakh rupees in purchase consideration of net assets of 4 lakh 70. That means 30,000 worth of excess payment is being done. And whenever there is an excess payment, that is for goodwill. Okay. जो यहाँ एक्स्ट्रा पैसे दिए जा रहे हैं 30,000, ये गुडविल के लिए दिया जाता है, एंड गुडविल एक एसेट है, एसेट डेबिट होता है, सो डेबिटेड टू गुडविल अकाउंट. ओके, नेक्स्ट वन, Maria Limited took over assets of 12 lakhs and liabilities of 4 lakh of Shubh Limited for an agreed purchase consideration of 9 lakh rupees. Okay, so purchase consideration यहाँ दे दिया गया है. Okay, and the amount payable is by issue of 11% debentures of 100 each at 10% discount. So issue price of each debenture is rupees 90, 10% discount. Okay, don't get confused by 11%, don't get confused by 12 lakh minus 4 lakh, 8 lakhs. Okay, that's not required here. Purchase consideration is already given 9 lakhs, issue price is 90. So the number of debentures is 9 lakhs by 90, which is 10,000. Answer B. Okay, just do it step by step. If you read the question carefully, the chances of errors will be way less. Okay, next one we have Kavita, Savita, and Madhu are partners in a firm with their capitals of 6 lakhs, 4 lakhs, and 2 lakhs. After providing for interest on capital at the rate 10%, so again 60,000, 40,000, and 20,000, right? So let's write it down here. So interest on capital will be 60,000 for Kavita, 40,000 for Savita, and 20,000 for Madhu. Okay, so total IOC that we get here is 1,20,000. Okay, this is required in the calculation. So total IOC we get it as 1,20,000. Just let's write it down here. Now Kavita personally guaranteed that Savita's share of profits after charging interest on capital would not be less than 1 lakh in any year. Okay, profit for the year was 3 lakhs. If you remove 1 lakh 20 from 3 lakhs, it's 1 lakh 80,000. Okay, so 1 lakh 80,000 is the distributable profit. And out of that, if you calculate the guaranteed partner's share, okay, so Savita's share is how much here? As you can see, Savita's share is 1 by 2. Okay, now 1 by 2 means half of 1 lakh 80, which is 90,000. But the guarantee given is 1 lakh. Okay, so there's a shortfall of 10,000. All right, so if you look at the question now, what do we have? So Savita's share of profit is short of the guaranteed amount by 10,000. Okay, you understood the calculation. The second part of the question is asking the total profits of the firm after adjustment. Now, Savita is given 1 lakh. Okay, let's go back to the same question, same calculation. So out of 1 lakh 80, Savita is getting 90 as a share of profit, and remaining one third means 60,000 Kavita is getting. Okay, so let's write it down here for a better understanding. Kavita's share is coming to 60,000. Out of that, Kavita will give 10,000 to Savita because Kavita has guaranteed that. Okay, so Kavita's share is after giving the guarantee or after bearing the deficiency is 50,000. All right, Savita is getting 1 lakh 90,000 plus 10,000. Okay, so Kavita's share is 1 lakh, straightforward. Now, what about Madhu? Madhu's share is 1/6, and Madhu is not involved in any kind of guarantee. So 1/6 of 1 lakh 80,000 is 30,000 is Madhu's share of profit. So let's have a look at the option. This is the option that we have 50,000, 1 lakh, and 30,000. Okay, let's move on to the next one. Number 6. A company forfeited 400 shares of 10 each at rupees 8 per share called up for non-payment of first call of 2 per share. On forfeiture of these shares, share capital account will be debited with. Now always remember in these cases, the share capital amount is always debited with the called up amount. Okay, so don't forget this. I've seen a lot of students forgetting this called up amount. Okay, how much is the call money? 8 per share is called up, right? So 400 into 8 is 3200. All right, so better understanding 400 into 8. If you remember these concepts, things really become easy. बहुत ज़रूरी है सब concepts को याद रखना ताकि एग्जाम में फटाफट किया जा सके without wasting much time. Next one that we have is again on forfeiture. Forfeited 700 shares of 10 each issued at a premium of 10% for non-payment of allotment money of 5 per share. Okay, so 10% premium, 10% of 10 is 1 rupee is the premium here. Okay, so nothing much to be worried about or confused about. Just 1 rupee is the premiums. Total share value is 10 plus 1, 11. And allotment money is 5 per share, including premium. First and final call of 3 per share. So 5 plus 3 is 8 here. So in that case, if we consider 11 as a total value, then application money is rupees 3 per share as well. Okay, that is important. Application money. Let's do the calculation here. Application money equals 11 minus 5 minus 3, which is equals to 3. Okay, so this is how you have to find out what the person or the share applicant have paid. So on forfeiture of these shares, share forfeiture account will be created with, and always remember share forfeiture is created with the amount of money that has been received. And in this case, if the allotment money has not been received, first and final call money have not been received, that means the application money is always received. That is the only money received here. 700 into 3 is the answer here. So 700 into 3 equals to 2100. All right. Next one that we have, Rohit Limited issued 2009% debentures of 100 each at 95 per debenture. 9% debentures account will be created by. Again, conceptual understanding here. 9% debentures account will always be created with the face value. Okay, don't be confused with this 95 given here. That's given to confuse you. Face value 2000 into 100 is 2 lakhs. Okay, next one. Which of the following statement is incorrect? Now, a lot of students, again, I have seen, even though it is written in bold, students still miss it out. So, interest on debenture is a charge and not an appropriation. That is correct. Debentures can be issued at a discount. That is correct as well. Debenture holders do not have voting rights. That is also right. So, debentures cannot be converted into shares. This is incorrect because debentures can be converted into shares. Okay, let's move on to the next one. Here we have three partners, Aman, Aadhar, and Avinash, were partners, and their PSR is given as 3 to 2 to 1. Okay, Avinash retired from 1st July. On the date of retirement, there was a debit balance in the profit and loss account of 1 lakh 20. Okay, debit balance is shown here. So, what should we do? The question is asking about the same thing. Then, as a rule, any debit balance of profit and loss account is distributed among the all the partners in their old profit sharing ratio. So Aman, and this is the loss, this will be debited to the partner's capital account. So debited to capital account of all the three partners in their old PSR. Option B is the answer. Next one, Nidhi and Kunal and Kabir are partners in a firm sharing profits in the ratio 2 is to 1 is to 2. Kunal retired and the balance of his capital account after making necessary adjustments on account of reserves, revaluation of assets and reassessment of liabilities is 80,000. It's already given here. Okay. Now Nidhi and Kabir agree to pay him 1 lakh in full settlement. Now if the balance is 80,000, you're paying extra one like extra amount, extra by 20,000. So that extra is nothing but you're paying the share of goodwill. Okay. And that's the question. Kunal's share of goodwill on his retirement is 20,000. All right. Next one. Assertion and reason. Goodwill is an intangible asset, which is correct, and goodwill is the value of the reputation of the firm in respect of the profits expected in the future over and above the normal profit. That is also correct. So, option C, both the assertion and the reason are correct. Let's move on to the next one. Here, A and B are partners in a firm sharing profits and losses in the ratio 7 is to 1. A withdrew a fixed amount of 12,000 at the beginning of each quarter. Interest on drawings is charged at the rate 6% per annum. The journal entry for the amount interest will be. Now, interest on drawing is a charge to the partner, so partner's capital account is debited, and interest on drawings is an income to the firm, so that's credited. Okay, let's calculate the amount. Now, since the amounts are the same in all the four options, so we don't have to do the calculation. However, if you are sure of the journal, then it becomes easy. Okay, but if you want to understand how 1800 is coming out, you can refer to the video that we have in the channel. The entire playlist is there on interest on drawings to check that out. Question number 12. The part of the authorized capital which is actually issued to the public is called nothing but issued capital. Okay, don't be confused with the word subscription here. Issued is the keyword here. Next one, Sinki Limited forfeited a share of rupees 100 issued at a premium of 20% for non-payment of first call, rupees 30 per share, and final call rupees 10 per share. The minimum price at which the share can be reissued. Now, this is a question which has become hot favorite for everyone. This kind of question where either they're asking the minimum price at which the shares to be reissued or they're asking the maximum discount that can be given on reissue. Okay, so maximum discount is nothing but the amount that has been forfeited. Minimum price that the share needs to be reissued is the amount of non-payment. So rupees 30 and rupees 10 if you add up, that is rupees 40. So 40 rupees is the minimum price at which this has to be reissued. Or if you look at the other way, 40 is not paid. That means rupees 60 has been received. So rupees 60 has been forfeited. So that becomes the maximum discount you can give. So out of 100, if you can give maximum discount of rupees 60, that means 40 rupees is the minimum price at which the share can be reissued. So the two ways of looking at it. If your concepts are clear, you would be able to do it flawlessly. Let's move on to the next one. Akshita and Anurag are partners and they have admitted Akshat in the firm for one-third share, which he is taking two-third from Akshita and one-third from Anurag. Now, again, use your mathematical logics here. Again, do not subtract two-third from this one. Okay, if you subtract, you end up losing marks because you do incorrect calculation. Two-third of his share, that means two-third of one-third. He is taking from Akshita, that means 2/9 he is taking from Akshita, and one-third of one-third, which is 1 by 9, he is taking from Anurag. So for Akshita, calculation will be two-third minus the sacrifice, which is 2/9, coming to 4/9. And for Anurag, one-third minus 1/9, which is coming to 2/9. So 4 is to 2. And for the new partner, Akshat, 1 by 3 means 3 by 9. So 4 is to 2 is to 3 is the answer here. Okay, you can use pen and paper as well for your calculation. Next one that we have, which of the following will be transferred to realization account? So again, your concept has to be clear here. Provision is transferred, partners loan no, general reserve is not transferred, goodwill is transferred. So two of them, so 1 and 4 are your answers. Okay, these two are transferred. So answer will be option A. Next one, PQR are partners in a firm where they have the ratio 4 is to 3 is to 1. P died on 1st September. On the date of P's death, the profit of the firm was calculated as 80,000. Okay, this is interim profit. Now P's share, as you can see, is 4 by 8, which means 1 by 2, half like. So 40,000 will be debited to P's 40,000 will be debited to PL suspense account and credited to P's capital account. So here they're asking about debited to PL suspense account. Okay, straightforward. Next one. Three partners we have again, Pooja, Anita, and Anita. Their old PSR is given. Pooja retired and her share is taken by Anita and Anita equally. So let's do the calculation. 2 by 6 is the old ratio. 3 by 6 is Pooja's share, which they're taking equally. That means 3 by 6 into 1 by 2, which is 3 by 12. So 2 by 6 plus 3 by 12 is 7 by 12. And 1 by 6 plus 3 by 12 is 5 by 12. So 7 is to 5 is the answer. Okay. You have to be quick with your calculations so that you don't end up losing time. And that's why you need to practice a lot. So section A, all the short questions are done. Now we'll move on to the next section where we have the remaining MCQs, which is part B. Which of the following equations is correct? Now again, cost of revenue from operations, we all understand that we subtract gross profit from revenue from operations to arrive at cost of revenue from operations. Understand the concepts, understand the formula so that you can arrive at the answer correctly. Okay, which of the following is a tool for analysis of financial statement? Cash flow, yes. Statement of PL, no. Notes to accounts and balance sheet, no. So only cash flow. Option A is your answer. Next one, 28. We are required to calculate the proprietor's fund, which is shareholders' fund. We have the current assets, non-current assets, long-term borrowings, and proprietary ratio. Total assets, non-current assets plus current assets, which is 60 lakhs. Proprietor's fund is proprietary ratio into the total assets. So 25% of 60 lakhs is 15 lakhs. That's the answer. All right. Next one. Dividend paid. Now, this is a financing activity. We all know. Straightforward. Dividend paid is a financing activity. Interest received on investment is nothing but investing activity because this is something that you're earning from your investments. Okay. Again, if you're practicing enough, then you should be able to pick them up quickly without wasting much time. Which of the following transactions are shown under financing activities? Issue of equity shares, yes, it is shown. Cash from debtors, no, this operating. Redemption of debentures is financing. Cash paid against trade payables, that's operating. So 1 and 3 is your answer, option C. All right. So we have covered all the MCQs in this video. If you have any questions, do let me know in the comments box below. I'll be more than happy to help you out. And if this was really helpful to understand at a concept level, hit the like button and do share with your friends. Stay tuned for more videos in this series. If you have any specific video you want me to make, share in the comments box below. Thanks for watching.